Hey, what's up, everybody? It's John and Vince from Sock Mortgage, and we're back with another Market Minutes. And today it's August 1st, the first day of August. Summer is just flying by. A few weeks from now, we'll be back to school, getting up early, doing all that crap we hate. But while we lean into the last few weeks of summer, Vince, tell the folks what we're seeing in the market right now, what they need to be aware of, and kind of what's happening this way.
Yeah, so as you probably have heard, the Fed decided to raise rates again, the 25 basis points. Now, what we think is we're kind of coming towards the top of that, right? So we're hoping, by the first of next year that things are going to start coming back down a little bit. But obviously, it's just going to depend on inflation. So CPI data comes out next week, August 10th. That's something that the Fed watches closely, and that's a big factor of where inflation is heading. So the one thing I want to mention is just the cost of everything's still up. Credit card debt is the highest it's ever been. So we're in a very unique situation right now where everyone has more equity than ever in their home. And yeah, interest rates are up on homes, but credit card rates are way higher. So you can actually use your home as a way to gain back financial freedom. And there's nothing to be embarrassed about there. It's just some of us had no choice to get into that position, but you can use your home to get out of that and set yourself up for the future. So what's the forecast looking like, John, over the next couple of weeks?
Yeah, so a lot of what Vince said, it's really going to depend on what we see from the inflation data. Again, a lot of indication is that we're at the top here. We're almost at the ceiling of the Fed rate hikes and interest rates, but we don't really know. I mean, we were thinking kind of in June we were going to start seeing a little bit of that pain go away, and here we are in the first week of August, and it's still happening. So if you take a look at the chart here, you see now we're in the fours. A lot of the charts that we were showing last month and even in June were, 3.4 to 3.7. We're in the fours now, which means we're on the higher side of rate side. So there's a couple of good things and a couple of bad things about that. So bad thing is, yes, rates are higher than they have been. The good thing is this is kind of the new norm and more people are accepting where rates are. And like Vince said, there's a lot of opportunity for people where even if you're at a 7 or 7.5% mortgage interest rate, it's a lot better than 24 or 25% on a credit card. Don't use this time where everything is up, where where debts are higher to rack up that credit card, hurt your credit score. So when you are in the position you want to move or you want to buy something new, you want to take cash out, that it's too late for you or you're behind the eight ball. So what I would say is, hey, if you thought about refinancing to take some cash out or you're thinking about purchasing a home, at least talk with somebody, professionals like us. We can show you what the rates look like. We can give you different payments and program options. We can make sure you're getting the best situation. Hey, the truth of the matter is we'll be honest with you, whether it works for you or not. We're going to let you know if it's a good decision or a good option for you. So as always, guys, thank you for joining the Market Minutes. You can always reach us at 586-854-779 or 586-371-6104 or online at sockmortgage.com.
And check us out every single Tuesday.